Welcome, Michael Murray here at the Future of Digital Assets event in New York City. Chris Gaddis from GP Agency joining me here. Chris, great to have you at the event, man. Thanks for being here.
Appreciate it.
Great to have you here. And obviously you're here with a couple of other advisors and some other people. We're talking about financial literacy, financial success, and the future of the industry that you're in as well. Of course, it's the digital assets event, but there's so much more to the conversation than just digital assets and cryptocurrency.
Yep.
So talk to us a little bit about your agency, what you're doing in the financial advisor space, and why you chose this field to get into.
Yeah, very early, my dad told me if I can make finance my strength, I'd be successful in life, because that's how everything revolves around, right? So it was one of those things I was very focused from an early age on saving, investing, returns, other people's money, all those things that we hear about. And so that's kind of what got me interested in it. And as I've evolved in the industry, you really learn it's a big game. It's a game.
Yeah.
There's a lot of things going on, a lot of different aspects that you need to consider. So the digital currencies that have come out and become so popular the last couple of years, real estate, which I know we'll talk about, and then the traditional financial planning, investing, and all those things. It's the best way I describe it, it's like a puzzle, and you got to put all the pieces together, and my mind, for some reason, really enjoys that.
That's fantastic.
Yeah.
And I think it's interesting, too, because you're obviously in the younger segment of investors, consumers, and the younger population. What is it that you think the view for younger investors or consumers or individuals is about financial literacy now? Is there a lack of knowledge in that space?
Oh, man, yeah. I think there's a huge opportunity on both sides for the younger group of us that are on this side of things, because the average advisor is 58 years old, aging out of the industry. They're leaving. There's not a lot coming into that to replace them. So people are having trouble finding good advice, good help. And so as a consumer looking for that, I think it's very important, because there's things that you don't consider that we are trained for. We have training every year. We have to go through these things. Tax planning, for one thing, right? So it's one of those things, can I go into a robo fund? Can I go in, just go invest myself, find something on the internet? Absolutely. But then there's other things to consider. What are the tax consequences? What if I do this? What does 1 extra % a year give me over time? A lot when you start compounding that. So there's little things that you don't consider, that we have tools that are very expensive at our fingertips, that we can do calculations, we can do planning, and we can look how does this affect this? We can do stress testing. What if high inflation? How does that affect it? What are all this international conflict? What does that do to it if the markets turn? And we can stress test, and so a 1% difference makes a lot of difference.
Yeah.
Especially long term, and I think as consumers really try to understand that and realize, all right, I might be able to get into a fund or do something, but what does that look like long term? I think that's where the help of a professional really does help.
Absolutely.
Yeah.
And you talked about compounding, and before we talk about real estate, because I think what you're doing is really, really interesting.
Yeah.
I think the younger generation a lot of times will take the short-term win over the long-term future and building to that. You think there's probably a mentality with the younger generation where we don't think about the next 15 or 20 years, we think about the next 15 or 20 minutes, especially in the 20s.
Yeah. Which is something to be said about that. Or I've got a little bit of that in me as well. But I think planning for those days allows you to do more. Yeah. And I think that's a big, and I have that myself. The experience is really important. I have 4 children. We like to travel internationally and do those things. So, you're weighing the cost of that versus investing or saving. You still have to live and do that. But those short-term decisions have a long-term impact.
Yeah.
And so just making them without considering it is a mistake.
Yeah.
And then making it at the expense of that is also a mistake. And there's a balance, I think. So finding that balance for you as an individual and your plan and what you want. And I tell everybody, everyone's plan's different. You can have whatever plan you want. Just make sure you know it and you're working towards that.
Yeah. Well, and especially, I'm sure you'd agree, in an environment like this, too, we've seen interest rates skyrocket over the last year. The cost of borrowing has increased. And just the volatility in the landscape where, whether you're a small business or an entrepreneur, the access to capital is becoming more difficult. So planning for that future and getting your money in the right places is more important than it's ever been.
Yeah, absolutely. I think, one of the things that's really important in the planning process is flexibility.
Right.
And so if you have the ability to be flexible and make different decisions and have all this at your fingertips, it actually saves you as well from making a short-term decision that really impacts you.
For sure.
Like borrowing at a much higher level. If I would have saved and had X dollars to do this instead of having to go borrow it, now I'm paying 8-10% in interest on top of that, and what does that do? So all those things definitely impact it, and something to consider.
Absolutely.
Yeah.
Now, real estate specifically, we talked about this before we started too. I'm involved in it as well.
Sure.
Love that you're also in the industry. Talk to us about why you view real estate as such a trusted or such a wise investment vehicle when you're looking at your future financially.
Well, it's actually real simple. You look at all the wealthiest people in the world, and real estate is very important to them, right? They know the value there. There's something to it. It's very simply, they're not making more of it, right? I mean, you hear that all the time. It's not an easy industry. It's a very tricky industry. Different markets have different, consequences or things that are kind of going on in them. But I just see it as really important because, you start looking at the future. We're spending more and more time at home.
Mm-hmm.
Everyone has to live somewhere.
Yep.
and so when you start to look at all of that, it's also kind of a legacy piece, which is interesting.
Yeah.
You're building lasting things. That'll be there after I'm gone. They'll still be standing. And so it's really a cool thing. Specifically with me, I do it with my three brothers. They've had a general contracting firm for about 5 years in North Carolina, and they were making other people a lot of money building.
Yeah.
And they made decent money themselves, but they realized, hey, we can actually build and own these things, and we can build at a lower price, and we can create something really unique. So we've done that. We've been doing it for about 18 months. We've right now we have 22 active projects going on. We'll build 40 homes this year. And so it's a lot of fun doing it with family. It's a lot of fun to build something and see something tangible like that.
Yeah.
But it's also a great investment.
Absolutely.
It really is. And so when you kind of look at it and understand it, and I think, back to just consumers in general, diversification is very important. So having that as a piece of your investment, whether you're doing it or whether you're investing in it, what other people are doing, I think is really important.
100%. And the tangible aspect that you mentioned too, I think is interesting. This is the Future of Digital Assets Conference, so I'm not going to underplay how important those are. There's obviously a future for that part of the economy, but I think the tangible part of it is interesting too, where when you're putting value and equity into an asset that has a real physical value, you've got something, like you said, where they're not going to make any more of it. Land is always going to be here, but the real value that you hold in the underlying asset for that investment is something that can't be underscored enough, I think, for the younger generation.
It's known too, which is, so the future of the digital asset. We're discussing that, right? And we know kind of what it will look like, not really what it will look like. What will be that digital asset? How will the governments, regulate that or play on that? So the fact that we are talking about tangible asset is interesting, number one. But number two, it's something that everyone needs and will continue to use in some form or fashion. And whether it's tearing down that building and building another futuristic building, whatever that is, it's still necessary.
Right.
So it goes back to that diversification. If I'm just to put all my assets into one basket, I could lose big because I don't know the future of that. And so having pieces of all those assets, that's the key. That really is diversification.
So give us maybe a final perspective then too, because again, being the Future of Digital Assets Conference, what's your view on that industry moving forward? And maybe more specifically too, what's your view on having, a base of an investment where you have tangible assets and you have tangible real estate, and then maybe you have some more, predictive assets in the future in the digital asset space, where they might be a little bit more pioneering and maybe not as tangible, but you still have that stability to kind of build off of with real assets underneath.
Yeah, very important. In my portfolio, I have digital assets, right? And I've lost heavily in some, made in others. And so it's one of those things, again, going back, diversification is kind of a buzzword when you hear it a lot. And it's different for everybody. It's based on age, it's based on risk tolerance, based on length of that risk and how long you can take that risk. So I think it's important. I use this a 6-bucket strategy with my clients. It's based on their age, and we take different risks in each bucket.
Yeah.
And so, we know here, all right, we can take more risk. If we lose money, it's all right, we have time to let it come back. And we have the more less volatile investments where we say, all right, here we're getting a consistent return. So I think it's all about consistency.
Sure.
You might have up and downs in some of your investments, but if you have a consistent return based on that allocation, again, when we talk about planning for the future, I can take risk, I can do things, but I know if I can consistently get that return, consistently work on my plan, I'm going to get to the spot I want to be. And maybe one of these things hits it big, and I get I do better. Great. Yeah. But at least you know that you're aiming for a spot and can work on that.
A little more perspective, but you get a little bit more of the opportunity there.
Absolutely.
Too. Absolutely. Chris,
Absolutely.
Really appreciate the
Pleasure,
insights.
Sir.
Thank you so much for being here.
Thank you.